Okay, I think we'll get going. Good afternoon, everyone, and welcome to this Chartered Banker webinar where we're going to talk about cash versus crypto. A couple of housekeeping rules before we get going. We are running the session until 2 p.m, so we've got a full hour. I think everyone's familiar with Zoom, but if you've got any questions that you want to put to our wonderful panelists, you can do that through the Q&A. And we've got some time at the end, but if any question is particularly brilliant, I'm sure we can bring it in a bit earlier. This is being recorded, so you can watch it again, and you can also send it to all of your friends and colleagues who weren't able to join us live. I'll introduce the panelists. I'll tell you what, I'll introduce the panelists now, and then we'll do a little poll to get everyone warmed up. So if I share my screen now, if one of the panelists could tell me if they can see the screen.
Yeah, good.
Brilliant. Well, these are our two panelists. You've already seen them there. We've got David Hensley, who is co-founder and director of Enrio. He's got over 25 years experience in senior management with Santander, covering business transformation, operations, and customer services. He's also held non-executive roles with two leading FS providers, Lincoln Backs, and he became director of Cash Services UK in 2012. He was co-author of the UK Access to Cash Review and is a founder of One Banks. We're also joined by John Maynard from Pay UK, who is the Service Development Manager. His current role encompasses being part of a payment subject matter on the UK's back and faster payment schemes and a product and propositional development role of the forthcoming replacement for these two schemes, the NPA, also known as the New Payments Architecture. The NPA will see UK's retail banking payment rails move to iOS 20.022 and will bring a number of brand new innovations to expand access to payments, increase competition, and support new payments, products, and services. Thank you both for joining us today. I haven't introduced myself, so I'll do that now. My name is David Fagelman. I'm also a co-founder and director of Enrio. You don't have to be called David to work at Enrio, but it does make things simpler. Cash and crypto. I thought it would be good to start by just setting out definitions of these two things. So what is cash? So the Cambridge English Dictionary defines cash as money in the form of notes and coins rather than checks or credit cards. Do you have any cash on you? Will you pay by credit card or in cash? He says he wants cash in advance before he'll do the job. I think there should be one here that just says that I haven't got any cash, because that's probably what people mostly say these days. But we'll talk about that in a moment. Cryptocurrency, not as well known as cash. How's it defined? A digital currency produced by a public network rather than any government that uses cryptography to make sure payments are sent and received safely. Cryptocurrencies such as Bitcoin is what we're talking about here. What's cryptography? The practice of creating and understanding codes that keep information secret, or the use of special codes to keep information safe in computer networks. So that's just a little bit of background so we know what we're all talking about. Before I go to John to start us off, who's going to talk a little bit more on the crypto side. And that, you know, it's billed as cash versus crypto, but we're very much going to be talking about the future of payments and how these two parts of payments will interact over the next few years. I'd like to launch a poll. So Emma, if you could launch the first poll, which is, do you think that crypto will one day replace cash? My dog's shaking his head, which is what you can hear there. So he's going for no. So if you cast your votes, we'll give you a couple of seconds to decide, and then we'll end it. Do you think that crypto will one day replace cash? Final votes. Okay, can we close that, please, Emma? So, a third of you think yes, and 2/3 think no. Very interesting result. I like that a lot. Second poll. Overall, is crypto a good thing? Yes or no? Overall, is crypto a good thing? Couple of seconds to vote. Close the vote. Ooh, reversed. 70% yes, 69%, 70% yes, and 30% no. Okay, thank you very much, Emma. Well, that's very interesting. We'll run those polls at the end of the session, so to see if your minds change. So I hope someone wrote down what they were, because I've already forgotten what they are. I'm joking, I did. Thanks, David. Okay, John, over to you. Some thoughts on the crypto side.
Thanks very much. So, yeah, as David said, this thing was designed as cash versus crypto, and obviously we've got David and David from a cash organisation. Pay.UK, if you're not familiar with us, we process the interbank transactions. So if you go onto internet banking and do a payment from your bank account to the gas bill or Sky or your mobile provider, that transaction will most likely come across, if it's from internet banking, it will come across our rail, our faster payments rail, and that's the instant payments account to account system. We also run Bax Direct Credit, which is probably what you get your salary paid via, which is business to consumers mostly, or business to businesses. And we also run direct debit. You'll be familiar with that logo. Here's one I signed this literally earlier. That's where organizations reach into your bank account and take money out. So we're not, it might be obvious that that we're not really a crypto organization, but as was discussed in the introduction, one of the things that we're working on is a replacement for those three schemes, which is known as the new payments architecture. And part of my role is looking at things that are happening in the payments environment and working out whether they are relevant to the propositions that we're building. So our primary focus today is on replacing faster payments with a new system that takes advantage of the benefits of 20022, which basically includes a larger payload, so you can include more detail in there of what the payments, where payments going and what it's for. But it's also about adding additional functionality. So today we also process a reasonably large number of international payments coming into the UK, and you can initiate an overseas payment also through faster payments. But one of the things that crypto has introduced into the world is a far, I'll be careful with my words here, a far more accessible way of allowing individuals to send money abroad. Based upon the audience, I'll assume you're all reasonably familiar with concepts like correspondent banking. The concept that if I want to send money abroad, my bank has to have an arrangement with a bank overseas who can act on their behalf to send money to the end destination where they want it to. One of the key advantages of crypto is that you can create point-to-point transactions. The crypto tokens that I hold in my wallet, whether it's on my device or just on a piece of paper, are mine, and I can send them to any other wallet without any intermediaries. So if I'm sending money abroad, that money comes from me, although those digital tokens, those crypto tokens, go from me to the recipient wallet wherever that person is in the world, because obviously digital tokens are virtual. That's quite an interesting concept if you're into international, international remittances. Now, coming back to the title of the subject, cash versus crypto, that's a thing that you can do with crypto that you can't do with cash. Instigating a relatively instant transaction to somebody 3,000 miles away, planes don't really fly that fast. So sticking, and if you try sticking like £10,000 in your suitcase and try leaving Heathrow, you'll probably get stopped at the same time. So there's an advantage there's an advantage that crypto has. Crypto itself, I think it's fair to say, since it's launched, it started off as an interesting little experiment, which we're all very excited in the payments industry. If you look at it now, most people would agree it is primarily an speculative investment product. People buy it in the hope that it will go up in value. It's not really being used, cryptocurrencies aren't really being used for purchases of mainstream things. They used to be, clearly, when it launched. I remember there's an industry analyst called Dave Birch who bought a pizza with it. If you ask Dave now, he'll tell you that anybody trying to sell you a pizza using crypto is effectively trying to rip you off, because in 3 months' time, that pizza won't be worth as much as your crypto might be, and therefore you shouldn't be buying things with crypto. Clearly, there are things that you can buy with crypto, and they tend to be things that you cannot use more traditional payment methods with. And I'll put cash to one side from this bit. So it tends to be stuff that the payment systems such as the cards or even the banking services won't allow you to buy, because the regulators have lent on them and tell them they don't want that to happen. I'm not going to say it, but I can leave it to your imagination to work out what those things are, what those things might be. But crypto does a very good job in that space. The other thing I heard described as the killer use case for crypto as it exists today is ransomware, because ransomware really doesn't work without some form of anonymous payment method. So crypto is good in that space. But of course, I've just said the word anonymous there, and it's worthwhile bearing in mind that whilst we think of cryptocurrency as anonymous because you can create a wallet without going through KYC processes, in actual fact, there are very few crypto systems that are properly, truly anonymous. Most of them, as certainly the ransomware people in recent months have found out, you can trace who they belong to or where those funds are going, because by the nature of the crypto thing, they sit there. If it's posted on a blockchain, that blockchain is available for everybody to look at, and you can trace the transactions from end to end. So if I buy crypto and pay a ransomware organization, then you can track all that way, even to the point of exfiltration when it gets converted back into fiat currency. So that bit's there. One other thing I'll check in before handing across to David is, as you're students of this subject, is the economics of different Bitcoins. So you'll be familiar with the concept that Bitcoin is created through mining. Mining solidifies the blockchain, that kind of thing, and makes the transaction certain. Bitcoin mines 144 new Bitcoin per day. That's what that mining process does. It creates a new Bitcoin every 10 minutes. 10 minutes per day, 144 per day. That isn't true for all other cryptocurrencies. If you look at Dogecoin or Dogecoin or however you want to pronounce it, they issue nearly 15 million coins per day, which is not a small amount of money. And then other crypto, my personal favorite, I've got no holding in this, Nano. Nano did an initial coin offering and has never issued a new coin since. Now, in the crypto world, this growth in the size of the currency is known as inflation. It's different from what you might recognize inflation is from an economics point of view, but inflation relates to the growth in the size of the coin base that exists. And what I'd suggest is you go away and have a little think about what that means for the economics of those coins, because those growth rates tend to be static. Once you've launched a coin, it tends to be pretty static, and what impacts that will have. But anyway, have a little think about that. I think that should do for now. Pass across to David.
John, that was wonderful. Thank you very much. I've got one or two questions for you before we bring David H in. Could you talk? I'm springing this on you. I'm sorry. Stablecoin.
Yeah. Could
you talk a bit about that? And does that use cryptography? Is that a type of cryptocurrency?
Yeah, absolutely. So stablecoin is so what we discussed in terms of when we talk about Bitcoin and Nano and Dogecoin and the others, their price is set on a supply demand basis. So I talked about supply, obviously people buying those coins. As they exceed the supply that's available, the price will go up, and if people don't want the coin anymore, the price will go down. So supply and demand, and it entirely floats. That market is it's just completely variable. So the pound to Bitcoin or the dollar to Bitcoin exchange rate can just vary depending on what people's moves are at any given point or what crops up in the news. Stable coins are designed to be pegged to a specific currency. Not always, but generally that is true. So you launch a stable coin, for example, Tether, which is the one that's linked to US dollar, is pegged on a one-to-one basis. to the US dollar. So for any buy a tether, it should be worth $1. There are tiny fluctuations based upon what the availability of tether is, but generally it's generally the case. So what that looks like in practice is that organizations that launch stable coins have to retain a holding either in cash or other near cash assets to the value that is exactly the same as the numbers of stable coins that have been launched. If you look slightly wider, that looks very much like what is also known as what's known as e-money. E-money is a FCA regulated product FCA regulated product which operates on exactly the same basis. The primary difference then between stablecoin and e-money is where you hold it. So it could be that so stablecoins can be crypto, which means they can be token based with no central ledger, decentralized ledger, that kind of thing. E-money tends to be more of a closed loop system where there is a single ledger which isn't widely available to everybody, and you hold an account rather than a wallet. So what we tend to think of is that crypto lives in wallets, digital wallets. Crypto lives in digital wallets, whereas money or central bank money or commercial bank money lives in accounts, and one's decentralized and the other is centralized. So that's the situation with that's the deal with stable coins.
Thanks, John. There'll inevitably be a question about central bank digital currencies, but I'll wait because I'm sure people will have some questions from the audience about that. We've already had a question from the audience, which is great to see. So do keep them coming in. We will have time for them at the end. I'm now going to hand over to David Hensley, who can talk a little bit about the other side, the traditional cryptocurrency, cash.
Thank you. Thanks, everybody. It's absolutely delightful to be here. Massively out of my depth when John started talking there. I'm just David, your definition of money to get it from a dictionary is the most amusing idea anyone's ever had. Just pause, please, given it's an academic piece for the guys. So if you want to understand where cash and crypto sits in a money thing, you've got to define money. And I'm an economist. Economists define money as something that is widely accepted as the final payment for goods and services. Now, cash right now fits that. And I think it could genuinely argue that cryptocurrencies are becoming more fashionable or into that process. So right now, my definition of money is anything that's widely accepted to use it, if that's all right. Don't change your slide, David. It's a favorite of yours, isn't it? So if that's the case, then the basis of money is about trust. It's about a degree of trust that me and you would have over its value. And again, that kind of works with a crypto as well, but less so because John highlights, interestingly, that the cryptocurrencies have got a value of their own scarcity that changes, which makes the trust issue quite tricky. And I think using a Dave Birch example of a pizza is quite a cool way of looking at it. You wouldn't release something so widely fluctuating into some transaction that was immediate. And over the years, there's been thousands and thousands of years of development with money, and some things have worked better than others. And most people would, when defining what money is, say, well, it's got some characteristics, and it's got to be durable, it's got to be portable, it's got to be divisible, it's got to be uniform, it's got to be limited in its supply and accepted. And again, both of them, I think David, John, they kind of go down that route quite nicely. So that said, you could use anything for money. As long as the two parties involved accept that it's a transaction, then it doesn't really matter whether it's the pound in your pocket or the digital thing in your electronic wallet. So what's cool about cash, to eventually get to your question about cash, is the thing that makes it very special right now. It doesn't require the two people to trust each other, because we've got this thing in the middle that we can trust. And that thing is fundamental to the acceptability of cash around the world right now, is that we have a third party that we trust, the issuer, the central bank in most instances. And I think we'll keep coming back in the hour to that trust issue. There's a point, a Gladwell type tipping point, when people just start to trust things and accept them. So I think, David, that's my opening position on it. And if it's all right, David set me some like thought processes on that, and if I try and weave them in, but David yank me back if I get too deep and you haven't got John then. So can it ever replace cash? And my view is yes, of course, it's inevitable. It's inevitable at some point. Society will gradually come to the view that there is something better, as they've done thousands and thousands of years before. So that every evolutionary step that money takes on this journey adds a little bit of value. As we've moved from bartering to through coins and notes and where we are today, there's a little bit more complexity, I think, with every one of those steps. But the saving grace is the efficiency. What makes them interesting is, they are efficient, and people like John, if he doesn't mind me saying, talk about these payments in terms of being frictionless or friction. So cost is defined in those as the time it takes, and time is the commodity. And ultimately, if you have enough trust and enough frictionless transactions, people will rapidly accept new ways of doing things. And then I think the other thing we talked about in prep was like, well, will cash ever die? Well, yeah, I mean, I think it will, personally. I don't think it's my lifetime we're talking about, or maybe, but it's going to eventually go. And there's a very subtle distinction between will cash die and is crypto, interesting. Because you're taught as bankers to look at the central bank's balance sheet as the way of defining how the economy is performing. So a central bank historically has been the litmus test of economic stability. So the fate of cash in the long term ultimately has to rest with central banks, because they're the ones holding the balance sheet. They're the ones who ultimately decide whether we should use cash or not, or whether the new emerging concepts will gain traction. And I think cryptocurrencies are also very unique because public and private money is simultaneously held in them. Technically, you could have, whereas, traditionally cash is different. And the reason why that's like fascinating to people to explore as the stability starts to come is if you put too much public money into an economy, then the system slows itself down. And if you do put too much private money in, then it's a chase to the bottom from a consumer's point of view. There's no regulation. So to find a product that can have both aspects, depending on how you look at it or treat it, fascinates me. And it's only a matter of time then that we can do it. So here's the rub for me. I don't think crypto's the replacement for cash. I think there is going to be a replacement, but it's not that. This is just the first day of a new world for me. I mean, I think it's interesting as well the way John can articulate the scarcity, and it does feel like people are gold mining a little bit, and it's the new world, and nobody's yet accepted it. So I'm going to hesitate, because there's a massive lack of digital and financial inclusion in the world today. Until you fix that, you don't really get the next step change. So it's kind of the speech we're doing today in the panel discussion, to me, feels more like a headline than a reality. Cash versus crypto is a great way of setting up a conversation. If I were involved in cryptocurrencies, I wouldn't be looking at cash to replace it. I wouldn't even be setting that as the headline. So there's about 1.2 quadrillion pounds on this planet of value, dollars on this planet. And 650 billion of it is stocks and commodities. So I'd go there first, because you need a new way of managing all that data and all that construction. And if I could get that to work, then I'd probably go after the property market, which is about $400 billion worth of process. So I'm imagining a transition based on, what added value is. When you get down to physical money, and by physical I mean digital and cash, you're down to 200 billion out of 1.2 quadrillion. Physical cash represents about 4% of the entire wealth of the world. So why would you try and wrestle central banks and governments when you could actually lay the path for cleaner, accurate, safe transactions? So that would be the focus for me, David, if that helps. So I don't really, I think they're in the wrong room, these two products. I don't think they're in a competition against each other. It just so happens to make a headline. Pause for effect.
John, what do you think about that? Do you think it's cryptocurrencies will be more of a replacement for other non-cash current payments rather than it being a replacement for cash?
It's an interesting point. I suppose the thing is the people who tend to own those assets are quite happy not making them easily tradable. Yeah. Yeah, you don't get rich by giving it away. The usability thing, I think, is a really interesting point. I mean, just in my prep notes, I pointed out that, so I've got some crypto holdings, but there is a point at which my brain shuts off and go, I don't know, I can't process this stuff anymore. And NFTs and wrapped NFTs are in that space for me at the moment. I think one of the main challenges in the crypto space is there are a lot of very clever people looking at how they can do new crypto stuff. And it's lost usability along the way, but by some considerable margin. It is not straightforward buying crypto. It is not straightforward, having got crypto, sending it to somebody else in an easy way when that person's not directly in front of you. You need their very long address. They might send that to you as a QR code, in which case you've then got to photograph the screen. It's really, the user experience is far from good. And that is a real challenge in that space. I think the main advantage or the main benefit that we will see in the longer term from what we're doing with crypto now is what change it can affect on the rest of the industry. So there will be use cases for crypto. Discussing one the other day about if you're an artist and you're selling your products via NFT, you're selling your art via NFT, really you only ever see the benefit of that in the first instance, the first sale. And yet that NFT may go off and accrue in value. And if you're an artist, what you really want is to be able to get a residual benefit from each one of those transactions. That's great. That sounds like a really good idea until you realize that then Ford would do that to your car, or your house builder will do that to your house, and it'll all apply. And suddenly the beautiful thing that we built for artists to get rewarded for their effort suddenly means that when you sell your house, you've got to pay 10% off to Wimpy Homes. And that's not as much fun. So lots of potential unintended consequences from all the good stuff that we might see coming from this. Yeah, but in terms of, is cash going to go away in the future? Let's be absolutely clear. None of us can affect that policy decision, and none of us want to do so. But can you imagine Star Wars or Star Trek or The Fifth Element or any of those science fiction films where they're running around with recognizable forms of cash? No, it's all going to be digital in some form, but you probably will still end up having some form of tradable barter system for the black market for when the evil empire comes in.
I'm always up for some sci-fi analogies.
Yeah.
What's really interesting is we have this new technology and it all fits in with decentralized finance. It's new ideas of how to connect and trade outside of established systems and established networks. And it's all happening really quickly, and we're able to watch its development. There's so much commentary around what the future could hold for something that is still in its infancy in terms of its development. Then we're talking about it competing with payment networks that have taken decades to become established, and with cash, centuries, millennia to become trusted. David, I want to ask you about central bank digital currency, and do you think that we could one day have a digital pound that's issued by the state, so in the same way that banknotes are issued by the state?
Well, I kept thinking about this all week. So I kept thinking, well, this is going to come up, isn't it, as a question? And how am I going to go with that? And I kind of have we lost him, John, or is he just like legged it? Well, I'll keep going. He's done this once before. So, yeah, are you back? Hello. I think I'm in two minds here. I think there are three components to this type of vehicle. And there's a non-interest bearing element, there's a deposit element, and then there's a cash-like element. I kind of think all three of them have probably got to get into play to make it work for a central bank. And that CBCD would be the final piece of that jigsaw that would allow a central bank to say, I can participate, you can participate now, which would take us back to the opening points around trust. If you know, I think I've gone on record several times as saying, if my central bank issued a digital currency, I'd be probably more likely to participate in that process. And like John, I do hold a currency. I hold some elements of CDM from a speech I did about 5 years ago, and that was the payment, which was quite annoying because I don't really understand what I'm going to do with it. And this morning I thought I'd have a look at it in the wallet, John, and can I remember the password? No. So I don't know where that goes now for the rest of my life, but
in the regret bucket, most likely.
yeah, so, yeah, I must write to them conventionally to say, could you release my CDM? But I think it is inevitable that central banks kind of want to be in that space because they worry about the unintended consequences, as John says, of other people being in that space. But I think you need to understand how you would distribute them, because they tend to rely on third parties, the wholesale market, don't they, in the traditional cash model, and who could have access to them. But I probably think we're well beyond pros and cons now. We're on, it's going to happen at some point. It's just, what's the point where it feels like it? And I think John's touching nicely on it. It starts to move into a discussion about what are we going to do with them when they do create them, and how do they get that balance of public-private money right in that world.
I'll come back on that. I'm perhaps a little bit more skeptical about CBDC. I think the main challenge in this space is identifying what does it today, what alongside cash and alongside card payments and internet banking payments, what does CBDC bring as from a benefit perspective compared to what we already have in place? Now, there are clearly places where there are clearly examples where CBDC or something like that is useful. Those more obvious cases tend to fall in countries where there isn't a mature payment system, so where cards haven't taken off yet, or where there's low incidences of full banking, or banking is restricted for some reason, at which point digitizing that economy in the way that India sort of did a few years back can bring major benefits in terms of financial inclusion, accelerating the entire economy. Go off and have a look at M-Pesa, which is not central bank digital currency, but it is e-money. Go and have a look at M-Pesa in Kenya. I worked on that, best job I had. That's the example of where digitizing money can bring about huge change. And if you drive that as a central bank, rather than leaving it to the private sector, there may be benefits attached to that. The other key advantage of central bank digital currency is in traceability of transactions. So countries where they have a natural preference for keeping close eyes on what their citizens do would be naturally drawn to central bank digital currency, because it allows you to see who's paying whom and what they're buying and all that kind of thing. Neither of those two characteristics apply to the UK, at which point you then start looking at what else can central bank digital currency do that you can't do today with cards or with cash or with a bank account. One example that's often mentioned is this concept of programmable money, the idea that you could issue money to somebody, let's say, who's on the government could issue benefit payments to somebody, and then have some form of control about what they spend it on, so that it can only be spent. You can't spend it frivolously if you're being paid money to pay your rent. It can only go to the landlord, that kind of thing. The main challenge I've got in that space is it completely doesn't. It introduces costs, and it doesn't really reflect how we spend money, or our autonomy as individuals and freedom about how we spend money. If you are on the breadline and you're balancing a budget, you may well face a situation where you have a choice. So you either feed your children or you pay your landlord rent. Now, the landlord can go for a few weeks, but your children can't go without food. And if you take away the agency of the individual to make those choices of payments, you have devalued currency. central bank, programmable money cannot be worth that much in that case. And if you still think that programmable money is a good idea, then imagine that your employer paid 50% of your salary in the form of a gift card that can only be spent at a supermarket that only lives, the nearest one is 50 miles away from you. Because that's another function that's what programmable money can actually look like. So I'm kind of skeptical on the one benefit in our market of digital of programmable money, because I don't think it's a great thing. The other point I'll make about central bank digital currency is there's a cost attached to accepting it if you're a merchant, which has to be built into that entire solution. So if I pay cash to a merchant, the cost for the merchant is they've got to take it to the bank or find some other way of getting rid of it. If I make a card transaction, they have to pay the card schemes a transactional fee. There would be an equivalent in central bank digital currency, and for merchants to choose whether to integrate that in or not will directly depend on how useful consumers see it as being. So there's a bit of a chicken and egg situation there. If you look at El Salvador, the government has kind of mandated that merchants have to be able to accept Bitcoin as part of the thing that El Salvador is doing. That doesn't necessarily work well for merchants. So when does it become compulsion, or when's it left to market forces? Because if it's left to market forces, you could well see literally nobody buying it because it doesn't do anything for them that cash or cards don't do.
Fascinating insights. If your company gave you half your salary on a gift card to a supermarket, or probably a supermarket that they own as well, so they can really get you in a full loop. This morning, there's a great website called cbdctracker.org, which has a great map of the world and shows the progress that I'll pop it in the chat that different countries are making on researching and looking into a CBDC. I didn't know this, but Denmark in 2017 reported that they weren't going to introduce a CBDC because for households and businesses, because it would not match the challenges which introduction would present. Which I thought was very interesting, because I thought that they would, I remember hearing them talking about one ages ago, but they quite quickly decided that it wasn't worth going forward with it. And there's a lot of hype about it, and I wonder over the next few years if we'll see other countries come to a similar conclusion as they actually look into the reality of introducing something like this.
I think everybody in this space is looking at it. Obviously, the Bank of England have got two working groups, a technical one and a policy one, which, full disclosure, Pay.UK is a member of both. The challenge is, the challenge is manifested in the terms of things like how do you process offline payments? With cash is easy. If the if you're out in the middle of nowhere and there's no Wi-Fi, there's no internet, cash is easy. You just hand something over. Cards have got this concept of offline transactions to support that, so you can still make payments that way. Cryptography and the trust model that David H referred to earlier, intrinsically, at the moment at least, intrinsically requires some form of communication between two different organizations, perhaps multiple organizations if you're talking a blockchain or a distributed ledger, which isn't readily achievable via an offline environment. So even if it's not a policy issue, it could still end up being a technology issue that needs to be solved.
David H, so one of the challenges with cash is that, and we'll go to questions after this, so if anyone's got any, please send them through. There's already a few there, which is great. Challenge with cash is that it's declining, it's being used less, it's still used a significant amount, really. But the big challenge is around reducing the cost of the infrastructure to make sure it's readily available. What needs to be done, in your opinion, to ensure that cash can continue as public money, whilst its usage levels continue to fall?
So I think a couple of things about that. I think actually right now, cash use is quite stable. I mean, the problem's been for the last 20 years, it's gone down every year as people have migrated. The pandemic has kind of leveled the playing field. And David knows, but for John's benefit and the people listening, David and I tend to think about people as I only use cash. I sometimes use cash. I never use cash. Well, sometimes the nevers were not affected by the pandemic from a money point of view. They may have took some money out to hoard, to John's point of a safety issue. The hardly evers just went to never because we were being told to. But for the rest of the society, nothing actually changed. They had no way to go somewhere else. And I think you see that in links figures. You see, what are we looking at, David? Something like £6 billion a month, steady these days. There's some fluctuation, but not much.
That's bang on, actually.
30 million transactions a week. And that's a lot of traffic in any world. So, oh, Graham's here. Oh, thank goodness for that. So I think you've got a period of stability now, which gives people the opportunity to press the reset button and work out how to handle their future state, because it's quite hard in a declining market to get enough stability to go, right, well, we could look at it like this, because every time you look at it, by the time you finish thinking about it, it's moved again. So I'm quite optimistic at the moment about a steady state world. But you know that for me, for those who don't know me, that's tinged with some sadness, because it implies that people aren't able to transition. You know, and I never think it's helpful when people say there's a need and a want. There are just people who use cash, regardless of the need of it or the want methodology. And I kind of want to see a much more inclusive world where people have choice. And a large group of people appear to be showing us they don't have choice. So have I answered your question, David, or have I wandered off on one of my...
You have answered it, but so there's lots of talk around what's the solution to access to cash. I mean, what do you think? If it's steadying, it still means that there'll be a reduction in infrastructure.
Steadying gives those people in charge a chance to fix it for the future, and they may have to swallow quite a bit of fixed cost and write that off to create that. I mean, if it is Graham, and I haven't got my glasses on, but you know, Link do amazing things to fill the gaps where people need a utility type solution, way ahead of its time. Link in its thinking about supporting the bigger picture. The wholesale market doesn't seem to be moving at the pace people like me would like it to. You see the stuff again this week from the Bank of England group. So that's why I think cash will be around for a very long time, because I think fixing inclusion is a generational issue. It's like when I was a child, there were a lot of adults who couldn't read and write. They just used the spoken word. And then there was a huge educational campaign for children to be able to participate, and that kind of helped their parents and their grandparents learn to communicate better. And I think it's the same with financial inclusion. There's a couple of generations of families around this country who just aren't understanding what financial inclusion means to them. Like John uses the worldwide examples of where, you know, in many places in the world, because of our infrastructure, like M-Pesa, they leapfrog an entire generation by leveling the field with technology. You know, have sometimes spoke out against M-Pesa, not but the product, but by the government's view that it was better to have financial inclusion than running water in some places. And I lived and worked in Africa for quite a while, and to see people with a mobile phone being able to pay for things but carrying water on their heads I couldn't process it. But I think in the long term, I should have shut up about that. In the long term, look what it's done, you know, an engaged society, which is what we want here in Britain, people to be engaged, inclusive, and have choice.
Wonderful, thanks, David. Let's go to some questions because they're coming in, and we've got about 15 minutes left, and I want to ask a poll as well at the end. So short answers to these so we can try and get through as many as possible. This one's probably going to John. Is crypto actually a currency? Is it not a commodity?
Yes.
You've caused that yourself, David.
It is a currency.
When David H did his definition of money, I thought, yes, actually crypto definitely fulfills the role of money. However, it is also a commodity because the price fluctuates so wildly.
David H, anything on that?
I think I never thought so when we started talking about it, but I think you could have both. I don't kind of think of it as a currency, but I do think of it as money.
It's a medium of exchange.
Yeah. Yeah, but at the moment, there's probably not enough people doing it to make it trustworthy enough to move it to the next level. I
think the blockchain bit covers the trustworthiness. bit.
I wish I understood more about that, John.
Yeah.
It's cool. That bit's the cool bit for me.
That could be another session that the John can do.
John explains to people who are struggling.
Sign this up. Is Bitcoin a hedge against inflation?
We don't provide investment advice. I'm not right. No one's going to answer that.
David H.
Oh, it can't be, because the way it works, that's not how money works. That bit isn't gonna. That's not going to be part of an inflation calculation. That's offline. I can do some writing about that, but it's not a inflationary piece. No.
Okay, thank you. Has the cryptocurrency entered a sort of cryptomania position in the same way as tulip bulbs entered tulip mania in the 17th century? Once upon a time, you could buy a house with a tulip bulb because the intrinsic value of the tulip bulb bore no relation to its perceived value. Are we in a crypto bubble? Definitely cryptomania, I'd say.
I don't know whether it's. I don't know if it's a crypto bubble or not. I don't think it's quite the same as tulips, because tulips expire and they're not easily transferable back. I think as an intermediary currency, as I said before, you can buy some things with it, just not things you can list easily on Amazon. So it does have some intrinsic value. The relationship between Tether and Bitcoin is very much worth further exploration of your time, because that Tether appears to be acting as some form of underpinning of the value of Bitcoin.
We'll see more of this with DM and more stable coins coming out. We'll see these kind of change. David, anything on tulip mania tulip bubbles?
I don't think you're at the. I think, interestingly, yeah, it's an unusual stable commodity, a tulip, because as John quite rightly points out, it's got a shelf life. I mean, you might be able to preserve them for a while. I don't know anything about growing stuff, but I know that pretty much you'd have to care for it. Whereas we're not talking, they're very different things, aren't they? Ones are like almost like, could say, well, milk, something that's got a shelf life. We know how long it lasts. It's probably in a scarce resource position if there was those problems like we get from time to time. But no, I don't think it's a bubble.
What's the difference between a CBDC currency of a country? Would, for example, a digital pound be of different value to a non-digital pound?
It shouldn't be. It should be exactly as a form of exchange. Whether the way it gets implemented means that a merchant has to hold on to a central bank digital currency as a stock item, which is what happens with M-Pesa, that could result in a situation where you could end up having differential pricing depending on whether you're spending money on CBDC versus cash. It depends very much on what the cost of exchange is, converting central bank digital currency into commercial bank money. The Bank of England's completely aware of that risk in terms of its thought processes. So conceptually, it could happen. Nobody wants it to happen.
John, would a central bank digital currency be a cryptocurrency?
That's in the how. So at the moment, the focus is on the why rather than the how. You could do it as a central bank digital currency. You could do it with a centralized ledger. It depends on how you want to go about implementing it and where the main element of that infrastructure is going to be.
David H, is cash more environmentally friendly than cryptocurrency?
Don't have the numbers on that. I know it's expensive to create cryptocurrencies, but it's equally expensive to manufacture coin. You mine that as well, and it's a fairly aggressive process, the creation of coin. Banknotes are polymer now. We do use a lot of energy moving money around, counting it, processing it. I don't suppose but given the relative size of money worldwide, I imagine it scratches the surface compared with what it costs to actually run these huge data centers that run it. So I don't have those. I could look at that. That might be a fascinating little study that goes nowhere.
Different crypto coins cost different things. Absolutely. Yeah. I mean, Bitcoin is famously expensive. I was describing on one of the previous calls, preparation calls. I've got a big chunky computer down here, which when I want to warm the room up, I get it to do mining, which is obviously wasteful, but there you go. Compared to Nano that I mentioned earlier, that has an insignificantly small footprint in terms of the speed of transactions and how much energy it uses to process. So it very much depends on how you build your crypto, I think.
Also, I don't think, thank you, John, that's helpful, but I don't think it's a helpful debate to imagine that was going to be the way we walked out of a problem, which is which one of them was the least damaging to the planet in a, neither of them are great. Plastic cards aren't great, There doesn't seem to be much at the moment in the monetary space that's caught onto the greenest credentials yet, but it will do.
Does anyone know anything about the Bahamas?
No, but I'm quite prepared to go there at their expense and do some research.
Anonymous, times it's very warm.
Anonymous viewer, we can answer the question if you send us there.
Yes.
But it's an interesting. So sorry, we can't answer your question. But if you look at the link I put in the chat, there's some information on the Bahamas in there because they are one of the first countries to introduce a digital currency, the sand dollar. Yeah. So a bit of homework for everyone to look into that. Final question before we do a little wrap up. I've got loads more questions, mainly for John because I speak to David.
Cool.
But I won't waste everyone's time. But it's a fascinating topic. This is from Robert. David, I'd like your views on this. Should Link, or I guess other organizations, work with the likes of Amazon to deliver cash? Amazon could become an acquirer entity in the same way as independent ATM deployers are.
I think two things about that. It doesn't just have to be Amazon. The post office today do a remarkable job of delivering money to most, well, they did until the pandemic stops us going on holiday, but the post office have historically delivered money to people's houses quietly and efficiently for probably 10 years. Anybody that's got a network of distribution points could easily do travel money, for want of a better word, is sterling. I think that collaboration probably might well happen, mightn't it, David? People looking at new ways to distribute money, but Link do a great job in that space. Sonnet with the turning every till into an ATM point of sale is also working quite well. The debate's probably more cleverly put about, do I have to leave the house to get money? I leave the house to buy things. And if I'm leaving the house to buy things, can I get money where I want to buy things? Whatever that means. Can I get access to a point of sale terminal, to the internet from my smartphone, or a bank? I don't think, in either of the access to cash reviews I've been supported since 2012, that has ever been resolved. Do I need the money here with me and then I go on my journey, or do I start journeys and know where the money is along the way? Does that help?
Yes, it does indeed. Thanks, David. Thanks, Emma, for posting that link in the right part of the chat. I did it wrong. Emma, can we pop up the polls that we ran at the beginning and see if anyone's changed their mind or forgot what they said earlier and wants to change it? So first poll, do you think that crypto will one day replace cash?
Really annoys me I can't vote, David. You know that?
How would you vote, by the way, David?
I couldn't vote. I'd vote yes.
So you could. So you were a guest.
Yeah, I voted yes. But
yeah, John, what would you vote?
I'll go back to my fifth element, multi-pass. Yeah.
Can we close the poll, please, Emma? See what everyone's thinking. Well, that's exactly the same.
They changed no one's minds today.
Does that either mean we were equally bad, John, or equally good? I'm not sure.
Yeah.
Actually, we might have changed people's minds. We just can't see it in the results.
Exactly. Let's give it a go with the second one, please, Emma. This isn't the indicator of success, or
It should be. Well, I think there's genuinely another question you could ask for that.
Pop the other one up, please, Emma. It's overall, is crypto a good thing? Well, how would you vote on this, David?
I went yes.
John?
Yeah, I'd
abstain.
Oh my word.
I don't think that's an option, actually.
Well, we've got 22 participants.
Oh, sorry. It's my fault. I didn't plan that one in. Sorry, Emma. I didn't mean to put you on the spot there. I didn't prepare that one, so we're not going to be able to ask it. However, I'm going to guess that it's exactly the same.
John's point beautifully made. The answer might be the same, but the people involved in answering could have changed.
70% said yes, and 30% said no. I think they're probably about the same.
If we've got another minute, I found that quite.
Closing remarks. Off you go.
I found that like those results juxtaposed, like so. The yes, they almost answered the same question in opposite ways. It was quite surprised. That's it, how it played out, because they were two sides of the same conversation to me. But those people's attitudinal view on their values imposed over the specific question you asked, rather than the broader one that we were probably reaching out.
Is there anything else you'd like to say, David, before we close?
I think John could be a cool Ask John every week on Enrio's own accounts. You know, ask John something about that, because neither of us have any real understanding, do we?
I'm going to set up Bluetooth headphones. John, any closing remarks from you on the cash versus crypto debate?
Only that this is. I mean, this is clearly an area that is attracting massive amounts of attention, and for the viewers, I would ask you to consider the motivate. Whenever you read anything about how amazing and fantastic and life-changing this all is, or could be, consider the motivations of the people who are telling you this. Why are they telling you it? Are they being remunerated in some way, directly or indirectly, as a result of this process? And have a questioning mind as to what the benefits are. I think that would be my advice.
I have one thing to come back on that, which is brilliant. Thank you, John. When I was at university, my very first day, the lecturer stood up in front of us and said, when anyone's talking, they're selling you something. The trick is you've got to work out what they're selling and why they're selling it. Beautifully put, John. I usually somehow weave that in. And at the time, I had no understanding of what he was talking about. I was like, oh, that's fascinating. What time's the bell going to go? But since then, it's been quite an important thing I've kept very close to me. Beautifully done.
On that note of optimism, John, David, thank you both very, very much. It is a fascinating topic, and it's changing by the day. So, yeah, I think I would just echo what John said and say, keep looking it up and find some good sources for your information. Thanks to Emma for putting this on, and the Chartered Banker for having us all. Like we said earlier, this is on demand, so you can watch it again. Hello to Michael Downey, and we hope you all have a wonderful afternoon. Goodbye.